Not all times of the day are equal. Now, this is a huge misconception among active traders. If you're going to trade, this truth better be pounded into your brain. Not all times of the day are good for trading. Now, in this video, we're going to focus on one of the best times to trade, the market open. And we're going to give you a strategy to trade the open. This strategy is called the Opening Range Breakout Strategy, or ORB. Now, by the end of this video, you're going to crave the opening bell. All right, let's get to it. The Opening Range Breakout Strategy, also known as ORB or ORB, is a strategy that focuses on a specific time period directly after a market's open. The idea is simple. Identify a range that play a directional move toward a pre-established higher low. The Opening Range Breakout Strategy is most commonly traded using the 5, 15, and 30-minute charts. This intraday trading strategy is designed to cash in on the action generated by traders diving into a market's open. Now, the ORB functions best with futures contracts or CFD products based on stocks, stock index, or commodity products. Okay, let's build an opening range. The most important part of the ORB strategy is picking your range. Now, there's many different opening ranges to look at. You can look at the US session, you can look at the London session, the Tokyo Open, maybe even the Australian Open. It really depends on what you're trading. For the sake of this example, I'm going to focus on the US session open and US equity index futures. This is an E-mini S&P 500 30-minute chart. Now, there's many ways to pick a range. There are many ways to do it. If you don't have any idea at all, run a simple Google search, do some research, pick something that's intuitive to you. If you need further brainstorms, TradingView is a great resource. You go up to indicators, you go ahead and just type in opening range, and there you go. You've got a list of all these community scripts. You can get in there and figure one out that maybe makes sense to you. To me, one of my favorites is the simplest, the 2-bar opening range. 2-bar. In this instance, we can see the volume is back in the market right after the US Open, that first hour, E-mini S&P 500 futures. That would be our 2-bar opening range. That's it. Very, very simple. I like simple. Simple is good. Okay, let's take a look at the 5-step process of how to trade the ORB strategy. The process is 5 steps, relatively straightforward. Number 1, we're going to establish our key levels. A great place to begin is your session high and your session low, and your previous session high and your previous session low. What those are going to be is potential profit targets. Are also going to give us an idea of how much room we have on a breakout between potential support or resistance. Number 2, we're going to draw our range. Now, this is a 5-minute E-mini Dow chart, and what we're looking at here is a 2-candle range. It's as easy as it gets. 2 5-minute bars. There's 1 candle. There's 2 candle. We draw a box around that. That's our framework for our trade. That is our range. Number 3 is confirmation. Now, you can use any set of technical indicators you want. You can use anything you want. Smart money concepts, Fibonacci's, whatever. In this case, we're going to use a 920 crossover because that's going to give us an idea of price action and which way the market is moving. You can see right there our 9 crosses our 20, so potential sell signal there. And number 4, we're looking for our signal candle. Our signal candle is just going to be a full body close outside of the range. In this case, we're looking to the short side of the market. We need to close beneath our range. And if we were the opposite, looking towards a buy, we'd be looking for a full body close above the top of our range. Lastly, we're going to go ahead and dial in our stop loss and our take profit. Stop loss, you have a couple of different options. Number 1, you put your stop loss right above the signal candle. All right, I recommend taking at least 1 to 2 on this. It's a breakout strategy. 1 to 2, 1 to 3s, 1 to 4s can be very lucrative if you get in on a move. Or you have another option, which is a little bit bigger trade, and oftentimes, even on short time frames, these turn into day trades. You see right there, you can put it right above the top of your range. Just be sure that your risk versus reward is dialed in. I recommend at least a 1 to 1, bare minimum 1 to 1. Okay, let's take a look at a few examples of how to trade the ORB. Okay, here's an example of a successful ORB trade. We've got our key levels outlined, our previous session high and a previous session low. In this case, our intra-session high and low don't mean much. You'll see our intra-session high, we traded above the previous session's high already, and we're making intra-session lows as we roll into that US Open. So this is a US 100 5-minute chart. Let's go ahead and identify our 2-bar pattern and then go from there. So right there, there's your open, bang, there's your opening 10 minutes. Nice, big, decisive move. We're definitely pushing to the bear. A couple of observations that we need to be aware of, especially if we are going to trade this. Number 1, there's your first 10 minutes. That's your 2-bar pattern using this 5-minute time frame. So something like this. Pretty darn good area potentially to attack to the short. Why am I looking short? Why? Well, you've got your 9 just crossed over your 20 EMA. Our confirmation's established. We feel pretty good about the downside of this market. One last thing. this is very attractive because our key level is way down there. We've got an opportunity to get with an intraday trend using a real short time frame in a pretty nice 2-bar pattern. So let's go ahead and roll forward in time here, and we're waiting for our signal bar. We need a body close outside of the range, and there it is. Absolutely beautiful. That's what we wanted. So now it's all systems go. We're looking to get short. We've got a couple of options on our trade. Now, number one, we're going to enter probably right on that close. You can either put your stop loss towards the top of the range, or you could play it ultra tight down here and put it right above the signal bar. Now, in this instance, I would definitely make sure you pad that a few pips. You're right above the signal bar. You can dial in a very positive risk versus reward using these very tight stops. The only thing is your success rate probably is not going to be as high as maybe a much larger stop loss. So that's going to be our trade for right now. Let's play this real tight, try to get this bearish breakout. All this space down here, this should be a relatively decent chance of hitting our profit target. And you can see right here, we're going to get our dump and we're going to go ahead and cash in. Okay, so right here we cashed in. That's a pretty darn good trade. That's a real tight scalp. It paid us off at a 1 to 4. It's tough to beat that. Now, an area where many traders make a mistake with this opening range breakout is they put their stop loss above this opening range, okay? And then they really look to shoot all the way for their previous session low or their key target down there. In this instance, that's going to be problematic. It's going to do two things. Number one, we're probably going to be in the market for a long period of time, which is going to expose us to systemic risk and volatility at the market close. And number two, it's going to be tougher to find trades just because there isn't always this much room towards our next key level. So pretty darn good look at a real tight scalp at a 1 to 4, and even not a bad looking day trade if you were going to go that route using the 5-minute, but that's a good look at a successful orb trade. Okay, this is an unsuccessful orb trade. Let's go ahead and get our 2-bar setup, and we'll go through a few observations that may in fact keep us out of trouble when we're taking these trades. Okay, there's our 2-bar setup. Now, that's the opening 10 minutes. That's the opening 5 minutes. E-mini Dow 5-minute chart, very short time frame. And you can see right there, there's going to be your 2-bar range. Now, there's a couple of things that we really need to be careful of. Number one, you can see that we get our crossover, our confirmation. Our 9 crosses over the 20. But look where we're trading. Now, you can see the price is trading right down near our potential profit targets. Remember, when we trade an orb, we're looking to break from a compression to those external targets, those previous session highs, the current session highs. Those are what we're looking to go to, not necessarily what we're looking to break through. In any case, let's roll forward in time here for a second. And there's going to be our confirmation candle. So there's our full body candle outside of our range. And what's that going to be? That's going to be our sell. So we're going to go ahead and put a short on right from this zone here, probably the close. You can either buy or sell on the close, or you can sell beneath the low. Let's just go ahead and sell the close because the breakout is on. And the other thing is, where's our stop loss? We could put it above the first candle, the second candle, or the top of the range. I like the top of the range, especially with a 5-minute chart. And let's go ahead and line this up and see if we can get a decent risk versus reward. I'll go ahead and leave it right there, 1.5 to 1. That's very conservative, but still not too bad of a trade. So let's take the trade and see exactly what happens. Okay, now we are short. We're officially short. Let's go ahead and speed this up a little bit and see if we can get some satisfaction here. And you can see right there, we're rolling. And what happens? Exactly what happens a lot when we get near these key numbers. Remember, everybody can see a session low and a previous session low. When we're trying to get a breakout winner, we want to get the breakout from the center to the levels, not necessarily break through the levels. It's almost called trading the middle, but that's a topic for another video. In any case, that's a good example of a loser. You can see we went right up there. We took out our first bar, really the opening high, and that's a wrap. So that's a good look at an orb trade that is a loser. Remember, they're not all winners. Risk versus reward is your key to success. The opening range breakout strategy has been around since the 1960s. Why? Because it stood the test of time, and it's a tried and true way of trading stocks and commodities. Now, the orb is more difficult to use on the Forex, but it can be done. If you're interested in an orb Forex video, leave a comment with a request below. Now, here's the secret to winning with the orb. Align your risk to reward. Never risk more than you expect to make. That's the bottom line. That's the golden rule. Don't break it. All right, that's a wrap. Like, subscribe, and we'll catch you on the next one.